Good morning, everybody. Mike Vacchi, PrincetonTrader.com, here with your Thursday morning pre-market webcast. Okay, S&P 500 E-mini futures, and let's start with the daily chart. And you can see that we've been in this, Bollinger Band compression mode now for going on a month. The Bollinger Bands are the yellow lines on the chart, and you can see how tight they've become, even stretching back to the middle of July. They become extremely tight during the month of August. The majority of that action, in fact, all of that action, except for some intraday moves, has existed between the green line, which is the middle band on the daily chart, and the upper band. What we have seen in the past session or two is another attempt to break below the daily mid-band. We're trading 70-75 as we speak. The daily mid-band is in the area of 74.5 to 85. It changes all the time. But right now the mid-band is trying to seal up as resistance. This gives the bears yet another golden opportunity to begin price expansion to the downside and retrace some of this summer rally that we've seen. Now, looking over at a 30-minute chart, you can see the inability to take out the middle band here at 2165 half resulted in a dip buy. Then every move back to 72.73 was support, and we finally traded up to new highs on the 23rd. Tuesday, we printed 91.5. Now, what we saw since then was lower highs. Yesterday, we couldn't get over 88 in the pre-market. We battled over 84, which was important because 84 had been resistance, and the inability of the bears to convert this 84 area to support was the first shot across the bow that there was going to be more trouble. So you break it here, you get back, here's your 79.5 weekly pivot. You test weekly pivot, then you go back up, and when you can't take out 84, it exposes you to that deeper move down, which is what we got. That move breaks weekly pivot, gets down into the 72-73 area, which had been support last week. Now, in Globex tonight, you've got the weekly pivot here, never got it back. So weekly pivot at this point is resistance until proven otherwise. They've got to avoid the double bottom though. 68.69 was a ceiling on the market two or 3 weeks ago for an extended period of time. What you're seeing now is it try to become support. In fact, if I zoom this out, you can see the overall development of it. Here's 68.69. Resistance back here, okay, goes support, and it stayed support on subsequent tests. The bears have got to get through 68.69, through 65 half, and if they can accomplish that, what you end up with on the daily chart is the ability to move down to the lower band in the 56-57 area, and ultimately to test the 8,000-pound gorilla in the room, which is this 52-53 floor, where a lot of this began. This 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 session support area that was then tested and rejected and moved about 40 handles higher. If you break that, then areas open up to the downside. You'll see the bands expand. You get price expansion downward. If the bears can't take out that area, then it's Katie bar the door, because you're going to set yourself up, just like it happened off of the 65 half area, for another move higher that's going to convert middle band and ultimately print new highs. And after pulling back, 20 handles from a high, if it goes and prints a new high now, the chances of band expansion to the upside are very, very real. So the bears have a golden opportunity, and it's an opportunity that they need to capitalize on, or the chances of it resulting in another leg higher are pretty good. All right, everybody have a fantastic day. Follow us over at Twitter at Princeton Trader. Come check out our website, princetontrader.com. Come check out our chat room. Come trade this stuff with us. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.